Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video, I'm going to share with you 6 different companies that have increased their dividend recently. I love dividends, as you know. Inshallah, one of my targets is at some point have enough income from dividends to be able to retire. If that happens, alhamdulillah. If it doesn't happen, I'm going to give it a go and see what happens, right? Can you imagine, basically you're buying a stock and it's basically buying part of a company, and that company pays you every 3 months basically some of that profit. And that's the key thing, profit. They've made enough money to pay us some of that back as a dividends, and the others they probably use it to grow the business, to buy back their own shares and so on. So I really like that. And normally companies that have increased their dividends, that means they actually are increasing their top line and bottom line, the revenue side of things, the net incomes are growing, and for that reason they have enough free cash to pay us as a dividend and increase that dividend. And I really like that. And that's, in a way, it kind of shows me how healthy the business is, and the fact that they have a good product, they have a good customer base, and they're not going to go out of business anytime soon. Again, I could be wrong. Okay, sometimes these companies borrow money and whatever. That's why you need to look at the payout ratios. You need to look at the net incomes and so on, how much free cash flow they have. But in a way, it's a good sign that the companies are doing really well. This is my portfolio, as you can see here, £66,433 right now. We're just above 3% right now, or £2,000. But yeah, the market has been crazy last week, so it's been up and down almost every single day last week. Again, it probably will continue doing the same thing, but I'm going to focus on these companies that I've identified that are really undervalued at the moment, and I'm going to keep buying them inshallah next weeks and so on. I've now used almost 91% of my ISA. I've got £1,666. I'm planning to add £666 this week, and then the next 2 weeks inshallah 500 to max it inshallah. I do have the money in the account, so all I just need to do inshallah, transfer it over and max it. Now let's get started, but before we do that, I would like you to join us, if you haven't already, on the Patreon. There's a lot of things that you can get inshallah if you join the Discord. You can see basically all the new buys and sells, portfolio update. You can get access to the trackers, which you can make a copy for yourself and so on. So yeah, join us, and inshallah it would be really great to have a like-minded people to share some good ideas. And thanks to the brothers that have already joined us on the Discord, that are sharing really good practice. So mashallah, just continue doing that. Ramadan's coming up inshallah soon, so if we don't talk until then, inshallah, Ramadan Kareem. I hope you enjoy it. I hope you have a wonderful time. I hope you inshallah may Allah make easy for us inshallah, and may Allah accept our du'as and prayers inshallah. I'll be honest, I love Ramadan. Every time it comes around, I feel like a kid again, alhamdulillah. After a couple of days of struggling, alhamdulillah, I get back to it. So alhamdulillah, that's why I said, it's exciting times for us, alhamdulillah. Right, the first company we're looking at, Dollar General. This is a discount retailer in the US. 47 billion market cap. It has a narrow economic mode, $208 per share, dividend yield of 1%, above 1%. Latest increase was 7.3. So this is why we actually added this company into this list. So 7% increase, which is really good. 5-year growth rate of 11%, payout ratio just below 20%, which is really good. And they have increased this dividend in the last 6 years. Payout is the annual payout, you will get $2.36. Safety 64%. Normally we're looking for 61 above. Profit margin only 6%, which is a little bit disappointing. And return on equity, we're looking about 38%. Free cash flow of just above 500 million. Total return in the last 10 years, we're looking about 16%. Next year they're expecting the earnings to grow about 11%, and then 8% after that for the next 5 years. Fairly valued right now, $212 per share is basically where the stock is. The next company is one of the companies that I'm actually going to do a bit more detailed analysis inshallah very soon. That's Williams-Sonoma. This company owns Pottery Barn, and it also owns West Elm product. They have loads of different types of products, home products, decorations and all that stuff. Currently they're almost about $8 billion market cap, so small cap if you like. It has a narrow economic mode, $116 per share. 3% dividend yield. Latest increase was 15%, and the 5-year growth rate is 12%. That's really good. Payout ratio just at 18% as well. Dividend streaks of 12 years, so they have increased that for 12 years in a row. $3.60 is basically where the payout ratio right now. The annual payout, sorry. and safety about 80%, which is really nice. Profit margin of 13%, return on equity 82%. They have a free cash flow of 851 million, and total return in the last 10 years is 11%. Just let's call it 12%. Next year they expected the earnings to grow just about 1%, and then 9% the following 4 or 5 years. Right now this company is discounted almost to 50% according to Morningstar, and $233 per share is where it should be. That's the reason I want to look at and see what the other analysts are saying, and dig a little bit more details. So I've already prepared the video, so inshallah I will release that very soon. It seems really interesting because although it's a cyclical kind of business, I think it's a consumer discretionary, but we'll see if it's a buy. Basically, if it's a more than, we'll basically get more details on this company inshallah. Next one is Applied Material. Is one of the companies in the semiconductors. 104 billion market cap, wide economic moat. Price is $122 per share. Dividend yield of 1%. Latest increase was 23%. 5-year growth rate 21%. Payout ratio of 13%. Dividend is basically increases of last 5 years. Payout is $1.28. Safety 86%. Profit margin of 20, let's call it 25%. Return on equity 52%, which is really huge. Free cash flow $4 billion. Total return in the last 10 years, we're looking about 25%. Next year is expected to grow about, decline of minus 3%, and then 12% after that. 12% premium right now. $110 per share is where the price should be. Next company we're looking at, Colgate. Colgate is one of the companies that I own in my portfolio. 60 billion market cap. It has wide economic moat. Price right now is $72 per share. I'm down, I think, a little bit right now. I think mine average is 76 or 75 or something like that. Dividend of 2.66, which is really good. Latest increase was only 2%, which is a little bit disappointing in comparison to the rest of these companies. Okay, but nevertheless, it's actually increased, and that is 60 years of increase in that dividend. The payout ratio, the 5-year growth rate is just 3%, and the payout ratio is actually 63%. Annual payout is $1.92. Safety 90%. Profit margin of almost 10%. Return on equity, we're looking about 472. Free cash flow of $1.86 billion, and then total return in the last 10 years we're looking about 5%. Next year they expected the earnings grow almost 10%, and then 6% after that. 1% discounted right now. $74 per share is where the price should be. The next company is another one that I own, Qualcomm, that I've been buying recently. Okay, 134 billion market cap, narrow economic moat. Price is right now $120 per share, so it's bounced back a little bit. Dividend yield of 2.48. Latest increase was almost a 7%, which is really good. 5-year growth rate of only 5%. Payout ratio 25%. Dividend streaks of 19 years increase in that. So another 6 years, this company will become a dividend aristocrat. Annual payout is $3.20. 80% safety. Profit margin of 27%. Return on equity of 71%. $8 billion of free cash flow. 8% return in the last 10 years, and next year they're expecting the earnings to grow, this year basically 21%, and then after that minus 7%. Okay, so Yahoo, according to Yahoo Finance, it's a minus 7%, minus 5%, depending on which analyst you look at, but that's just generally for the majority of the semiconductor companies, as is very, very cyclical sector. 14% discounted right now. $140 per share is where the price should be. The final company is Linde. This is one of the companies that I've talked about recently. It's a very similar to Air Products and Chemicals. $166 billion, but narrow economic moat. $330 per share. Dividend yield of 1.54%. Latest increase was 9%, which is really good. 5-year growth rate of 8%. Again, really nice. It would be nice if it was double digit, but that's really good. Payout ratio only 38%, and they have increased this dividend for 30 years in a row, so they are dividend aristocrat. Annual, by the way, dividend aristocrats are companies that have increased their dividend 25% or more that are in the S&P 500. Annual payout, we're looking about $5.10, which is really good. Safety 99%. Profit margins of basically 12%, 12.4. Return on equity 10%. Free cash flow of almost $5.7 billion. Total return in the last 12 years, we're looking about 13%. Next year, we're looking about 9.4% in terms of EPS growth. and then 8% after that, 6% discounted right now, $359 per share is where it is. This is, by the way, just to be transparent, I don't like sharing the family account, but this is one of the companies that I've added to a few weeks ago, about a month or so ago. It was down a little bit, so I've added a couple of shares of this company to that portfolio. The other company that I own is Air Products and Chemicals, and they're both very similar, so I've added this one here into my portfolio. Inshallah, we'll see how that one goes. I like the fact that they have a very low debt and all of that stuff. So there you have it, 6 different companies that all of them have increased their dividends. So this is the column that I want you to focus on, because that is where the increases come from. And again, this shows you every single one of these companies have made commitment to basically increase that dividend year after year for years. Some of them 30% years, some of them 60 years. Although it's not a lot when you look at companies like Colgate and so on, but at least that commitment is there, and the fact that the revenue is growing and helping us to obviously earn more. And again, you yield by the time you get to the, by the time you own this company for 20-30 years, yield on cost will be absolutely amazing. There you have it. There's 6 different companies. I just want to share with you guys a little bit of fun video. I hope you can join us on the Discord. If you haven't already, please do so. You can get access to all the spreadsheets that I use in this channel. Inshallah, we'll try to grow this channel as much as we can, help each other. If I don't see you until Ramadan Kareem, to you and your family, have a wonderful day. Assalamu Alaikum.